Welcome to Baby Does Business Podcast. I'm your host, Lil CEO. Today we're talking about tax write-offs, because a lot of people think a write-off means something is free, and that's not how taxes work. A tax write-off is simply an expense that reduces your taxable income. It does not mean the government gives you the money back. It does not mean you get something for free. It just means you're not taxed on that portion of your income. Most write-offs are tax deductions, not tax credits. A deduction lowers the income you're taxed on. So if you spend $10,000 and your tax rate is 30%, you might save about $3,000 in taxes. That means you still spent $10,000 to save $3,000. That item cost you $7,000 out of pocket. A tax credit is different. A credit reduces your actual tax bill dollar for dollar, but most business write-offs are deductions, not credits. This is why income level matters. If you make a lot of money and you're in a high tax bracket, deductions are more valuable. If you make very little money, your tax rate is low, so the same write-off saves you much less. That's why buying expensive things just for write-offs usually doesn't make sense if your income is low. Section 179 lets businesses deduct certain equipment faster instead of spreading the deduction over many years. This can help high-income businesses, but it still doesn't make things free. You are spending real cash, and the deduction only saves you the tax portion. Sometimes it's smarter to just pay the tax and keep the cash. Spending $20,000 just to save $5,000 in taxes is not a win. Cash flow matters, and write-offs should only be used for things that help your business make more money or operate more efficiently. Write-offs also must be ordinary, necessary, and primarily for business use. Buying personal or luxury items and calling them business expenses can lead to denied deductions, back taxes, penalties, and interest. And here's the part most people forget. If you write off an item and later sell it, the IRS may recapture the depreciation. That means you may owe taxes later on the amount you previously deducted. Many write-offs are tax deferral, not tax elimination. So no, you don't buy luxury cars or expensive items almost for free because of write-offs. A write-off lowers taxable income. It does not create free money. If the item doesn't help your business make money, buying it just for the write-off usually hurts you. If you enjoyed learning the business word of the day with @BabyDoesBusiness, please like and subscribe to hear more simple business tips. Next time we learn about depreciation. Depreciation is how businesses spread the cost of big purchases over time. This content is for educational and informational purposes only and does not constitute tax, legal, or financial advice. Tax laws and outcomes vary based on individual circumstances. You should consult a qualified tax professional, CPA, or attorney before making any tax-related decisions or business purchases.